Thank you for joining today's webinar, and at this time, I'd like to turn it over to Bill.
Great. Thanks a lot, Michelle. Good morning to everybody, and welcome to HBK's monthly risk advisory webinar series. I'd like to thank everybody for joining us today. I think we have a pretty interesting topic to go over. We're going to talk about SOC 2 reporting and a little bit of a peripheral as far as vendor risk management programs. Here's our agenda for our webinar today. I'm not going to go through and read it, but just give you a little bit of logistical information. So today's presentation is eligible for 1 hour of CPE credit. And in order to receive that credit, you have to stay on the webinar for the entire hour. And there's going to be there's actually going to be 4 embedded CPE questions that we ask throughout the presentation that you have to answer. Just answer them. You don't have to be correct, but hopefully they're simple enough that you will be correct. And then the 4th question just basically asks, do you want CPE, yes or no? And you answer yes, and we'll get your certificate by the end of the week. We've muted all the incoming lines, but we are monitoring the message control center. So if you do have any questions or anything, you can put them into the Q&A box. Or if you have questions or problems with your browser, you can and you can still type, you can put a message in there and we'll monitor. Probably the best thing to do if you start experiencing any kind of technical difficulties is just first thing to try is refreshing your browser. That takes care of 90% plus of the issues. Now we have a pretty jam-packed webinar today, but we're gonna attempt to leave about 5 minutes or so at the end for questions, so you can just queue them up as you go along. And then there's a PDF copy of the slide deck in the message control center that you can download if you'd like. Additionally, we'll be sending out a recording of today's webinar, as well as a copy of the slide deck by the end of the week. So either or on the slides. And this is just, if you've attended these in the past, this is just my bio. I'll just hit it real quickly. I have a dual role here at HBK. I handle internal IT security for the firm, as well as I do some external consulting with clients. Today I'm joined by 2 members of our SOC practice. Joel Van Horn out of our Columbus office has been with HBK for 6 years. He is a principal. He's a member of the assurance group and focuses pretty much solely on SOC reporting, both financial and employee benefit versions. Also, I'm joined with by a senior out of our Warrendale office, Owen Bleibtrey. Owen's been with HBK for a little over a year, working out of the, like I said, the Pittsburgh/Warrendale office, and he spends a lot of his time working with Joel, focusing on SOC reporting. For those of you that are here for the CPE, this is a requirement for our CPE issuing organization that we have to list the learning objectives of the presentation. This is basically the takeaways, what you should be able to pick up from attending today's webinar. And again, I'm not going to go through the detail. You can read those or take a look at them in the slide deck after the fact. But I just want to dive into the things. And so at this point, I'm going to turn it over to Owen.
So for our first topic today, I'm just going to lead in with a short introduction of what SOC is. So when you hear SOC, what it means is it's system and organization controls. And what it offers is a suite of service offerings that CPAs may provide in connection with system level controls of a service organization or entity level controls of other organizations. And SOC is governed by AICPA, which is the American Institute of CPAs. And in simpler terms, it's an organization defines their objectives. Then the organization develops their internal controls to meet those defined objectives. And then that's where we come in as the auditors and test and report on the effectiveness of those internal controls that have been defined. So the objectives of the SOC, of those internal controls that are developed, can be focused on an aspect of financial reporting, security of a particular system, or any service commitments these organizations make to their user entities, also known as customers, which that's going to lead into my next topic. Just so we're talking the same terminology here, we've identified the key terms that you'll see throughout a SOC report. And as you see here, it's a service organization, user entity, service auditor, and user auditor. So just simpler terms here. The service organization is the company or entity that offers those services. So that could be a payroll provider, a data center, or a similar company. Then the user entity would be the customers of that company or entity utilizing the information or those transactions. As for a service auditor, they're the ones, the CPA firm, that are hired by the service organization to perform the review. And then as for a user auditor, those are external reviewers of the SOC report for the effectiveness of controls operation. And these are the key players in SOC reporting. So just so when you hear those words throughout our webinar today, you have some background as to what we're referring to. So with that, this will lead into our first CPE question for those that are attending. So I'll give everyone a couple seconds here to read through that. Okay. So just some background on SOC reporting. As you can see from this timeline, it started in the early 80s and it's developed into what it is today. But you may be wondering how the CPA firm is involved within this process. So whenever you think of a CPA, you typically think of someone specializing in tax returns or financial statements. So that's part correct, but then there's also the other area that CPAs are involved in the security aspect. So first, CPAs, they specialize, whether it's tax, valuation, internal controls, or technology. And that specialization allows for further understanding within the different industries. And then second, as you can see from this timeline here, this type of specialization is nothing new to the CPA industry. As you see, back in the early 80s, before the first, at the time it was called a SAS 70 in early 90s, CPAs were going through this process. And then by the early 90s, that SAS 70 was utilized to perform the financial reviews or financial audits for those user entities. And then, as I mentioned, over time, it has developed into what it is today, covering more into service and organization controls. And then just a high-level overview. We put together just a sample breakdown. I'm a visual person myself, so we thought this may be helpful. That at the top, you would have the service organization. So in this example here, we'll just use a payroll company. They hire the service auditor to perform a review over their controls and then issue a report. From there, that report would be provided to the user entities or their customers. And then at that point, those external customers, they have their own user entity auditors who could rely on those controls that are identified in that report. And here, that's where you have the benefit of saving time where those identified security controls are identified. So instead of filling out that lengthy questionnaire that may come your way, you could refer them to the SOC report that touches on each of these areas. And there are other benefits, which we'll also dive into as well. So by undergoing a SOC exam, there are requirements where a number of service organizations are required to undergo a SOC exam. And this includes beyond payroll, such as medical claims processors, data center companies, loan servicers, and SaaS providers, so software as a service. And these are those companies that may touch, store, process, or impact financials or sensitive data of their user entities, also referred to as the customers. And any company with a business model based on providing a service to another company can benefit from a successful SOC exam as well. The key item that comes to light is the SOC report is an independent third-party validation of the service organization's commitment to evidencing their design and effective operation of those identified controls. So it not only lets those potential clients and customers know that your company is going down that formal route of these controls, but that assessment process itself can also help be proactive in identifying any weaknesses or flaws that can be remediated before any major impact does result in that factor. And then, as you can see here, just some of those general benefits. Diving into the last item here, that enhanced reputation, credibility, and marketability, that also gives you the ability to stand out from your competition, as your customers would know that you're taking security seriously by having these elements identified. And then later in the webinar here, Bill will be going over some additional benefits of undergoing a SOC exam, which would relate to a third-party risk management program. And then also later, Joel will be going through some of the common criteria within a SOC report, just to further showcase the elements that are covered within. So then the last areas that I have just to touch on for the general overview of SOC are the different types of exams that are available. So as you can see here, SOC 1 covers more financial reporting, while SOC 2 gets into the security side. Now, SOC 3 is a general use report. So back to SOC 1 and 2, those are restricted use reports. And within those reports, you identify who the intended users are. SOC 3 is general use. It's a public report, but you still have to go out, undertake a SOC 1 or 2 to also obtain that SOC 3. So generally, unless you're looking to have that public report, SOC 1 or 2 would be the focus. And then just to note, there are also SOC for cybersecurity and supply chain, but those aren't as common, and they're mainly available for specific cases. So we're not going to touch on those today, but we just wanted to point them out just for reference purpose. So again, just on that topic here, we just wanted to give a snapshot of those various SOC engagements, what they report on, the purpose, and then who uses them. And then as you can see, among these engagements, there are also 2 different types for each of these SOC reports. And again, I'm not going to go through these. This is just more just for informational purposes here. But in diving into the types of reports, you either have a type 1 report or a type 2. And in a type 1, it's a point in time. So we can use this month's as an example. So as of August 30th of 2024 is when the period would be to showcase that you have designed and implemented controls to meet your service commitments. Meanwhile, a type 2 does the same thing for a period of time. So in this case, if we were using today as an example, it could be from September 1st of 2023 through 8/30 of 2024 would be the period of coverage. But then it goes a step further and tests the operating effectiveness of those designed and implemented controls. And then this is just something also to keep in mind when it comes time to assess your vendors. And again, Bill will touch on this in a moment, covering the third-party risk management program. But there is the added benefit of having a period of time rather than a point-in-time report. With that, I'll pass it over to Bill.
All right, great. Thanks, Owen. Yeah, just a couple things just to add in to what Owen was said, which has provided a lot of great information for y'all. But so he talked about the SOC being from the AICPA, the System and Organizational Controls. So you also probably, if you're when you're just in your normal day life, especially when you're talking to IT people, you'll hear SOC, a different acronym, where they might be referring to a Security Operations Center. So just so you're aware of that. But sometimes your MSPs, your MSSPs will use the acronym SOC, which is different from the AICPA SOC for what we're doing. And furthermore, a SOC report that we're talking about here, as Owen talked about, could be used for reputation or marketing, and it's only a CPA firm has the ability to issue a SOC as in a SOC 1 or SOC 2. So just wanted to clarify that and move on and touch about third-party risk management just at a high level. So basically, in today's, everything's changing in the IT world very rapidly. If you've attended my webinars in the past, you're probably well aware that I've been saying for a number of years that third-party risk is going to get bigger and bigger, and SOC reporting is going to get more and more important. Well, some of these, if you just look at the slide here, it's, Owen went over the example of the payroll, and that it gives you the ability to vet your providers before contracting with them, and you can do it, set up a process where you're going to reevaluate vendors every X number of periods, whether that's months, years, whatever. But one thing I found very interesting was the bottom bullet point, where I'm a big proponent of the Verizon data breach investigations report that comes out annually. It's been done for 17 or 18 years now, but they actually changed the way they rate or classify breaches this year, and they actually had a category for third-party breaches, and that jumped 68% from last year when they didn't officially track it as its own category. So I think we finally arrived where the importance of a third-party breach is getting to be more and more prevalent, and something that people have to consider going forward, and who they do business with, and just what are the risks, because with the systems being so interconnected, it's crucial in today's IT environment. So why would you want to do this? How would you go about assessing your third-party service providers? Well, typically, the service provider is going to have somebody on the phone that wants to sell you their service, so they're going to make that very sound very great and hunky-dory, but that's their opinion. And so the second and third bullet points on my slide there talk about an ISO 27001 or a SOC report. So both of those are going to give you some type of independent assessment, where somebody with a reputation of being independent is going to give you their feel. Because if you do just listen to the sales rep who's going to give you the real rosy picture, that's going to be good. They're going to say they have all the cybersecurity controls that they need. Or you could take the approach of doing your own questionnaire, and if you're a large enough firm, you could try to do your own audit of them if they'll agree to let you do that. But that's a pretty heavy lift, that somebody's going to allow you to send an audit team into their facility to analyze their controls. So that's where we come back to the SOC 2 reporting is really quite a useful tool in everybody's arsenal to evaluate third-party risk. And then I'm going to, I'll talk about third-party risk a little more later in the presentation, but I'm going to turn it over to Joel right now for his talking a little bit more about the trust services and the common criteria. Take it away, Joel.
Great. Thanks, Bill. Thanks, Owen. So yeah, now I want to dive into a little more specifics on the SOC 2 report. So your SOC 2 report is a report that's intended to meet the broad range of users and detailed information about the assurance of controls relevant to security, and then also just in general, the trust service criteria. So there are 5 trust service criteria that are part of the AICPA trust service criteria. So you have security, confidentiality, availability, privacy, and processing integrity. So what we'll do is we'll kind of touch on each of these 5. So security is the one that's part of the common criteria, and security is required and will be seen in all your SOC 2 reports. Now, the other four, availability, processing, integrity, confidentiality, and privacy, those are optional. So depending on the nature of your organization, the nature of the service organization, it may make sense to include those. It may not make sense. It's one of those where you could start with security in your SOC 2 report, and then you can expand it down the road as you go through the journey to include any of those other additional trust service criteria. So for instance, availability is big in the MSP data center area where you're hosting customer data. So you want to make sure that's available. You have SLAs in place that require uptime to be 99.9% of the time. So if that's the case, you'd want to communicate the controls that you have in place related to availability. So today we're going to focus on just the security aspect of the SOC 2 report, the common criteria, and then, but just know that the ASCPA does publish a document that goes through each of the trust service criteria in detail, and then also has points of focus assigned to each of those criteria that kind of align with typical controls and areas that will be in place that would align with those controls as well. So with that, let's go ahead and jump into the, actually first, I think we have a poll question that we'll go ahead and open up. So with that, I'll let that run in the background. So I wanted to hop right into the common criteria or security criteria. So there are 9 common criteria, and we'll go through each of these at a high level in more detail and kind of generally cover what each one of these means, what it's looking for. So a lot of times with SOC 2, the first thing that comes to mind is IT security. Well, the one thing about the SOC 2 framework is it is more organizational level based framework. So you'll hit areas from all over the organization. So CC 1 through 5 are more of the organizational level, and then CC 6 through 9 are more security focused. So it's one of those, it does cover security, IT control, and physical controls, but it also has overall organizational controls. And we'll kind of touch on that here with as we go through each of those. So the first one, as I mentioned, organization management control, CC1. So think of integrity, ethical values, communicating to employees, hiring practices, making sure competent employees are hired, having an independent board of directors or executive management that's independent from a management function that's there for an oversight. One thing I will note is SOC 2 can be geared for smaller organizations or large organizations. So if your organization isn't one that's large enough to have an independent board of directors, there are ways to structure the controls to kind of meet the criteria, but not have that independent board of directors in place. So that's one thing. If you run into this and you're like, oh, I don't have a board, so I can't get a SOC 2, that's not necessarily the case. The COSO framework, which these common criteria are based on, is flexible, and there have been ways to structure the controls and the organization flow of information to help achieve the SOC 2 criteria, even with smaller organizations that don't have a board of directors. A couple other things to note here with CC1 is, it focuses on entities holding individuals accountable for their internal control responsibilities, making sure job descriptions are developed and those responsibilities are aligned and written down as well. So moving on to number CC2, this is that communication and information. So think the information being generated by the organization is relevant, quality information, and it's making it to the appropriate individuals. And then once it makes it to those appropriate individuals, think, is that then being communicated with the appropriate individuals, both internally and externally? So we'll want to make sure the organization has controls aligned to achieve these 3 criteria. One thing to note, and I forgot to mention earlier, as far as how many controls should be aligned to each of these common criteria. So in each case, there should definitely be one primary control aligned to each of these. Now, that control can be shared across multiple common criteria. So don't think you need individual controls in place for each one of these. There could be one that's aligned to CC1 and 2, so that single control can cover both. Now, typically what I'll see is a primary control and a compensating control aligned to each of these. Again, doesn't necessarily need to be unique to each of these common criteria, but you will at least need one control aligned to each of these. So moving on to CC3, this risk assessment, this is an important exercise for all organizations to undergo, independent of going through a SOC 2 examination. So what this is looking for is the organization's program to assess risks relating to the the objectives of achieving business. And then once they assess the risk, analyzing those risks and determining how those risks should be managed and mitigated. One thing to note, this is not specific to IT risks. This is organizational level risks. So there will definitely be IT related risks. There could be other risks outside of that, regulations, laws, geographic location. So a lot of areas to consider. Good practice for all organizations to go through. Typically, we see this done on at least an annual basis. It could be done on a quarterly, semi-annual, or annual basis, kind of depending on the organization structure and what makes the most sense and the risks that they have assessed as well. So one thing to note is fraud risks must be considered as part of the SOC 2 requirements. Again, the SOC 2 framework doesn't specify how the risk assessment has to be done. It just specifies the areas that need to be covered within the risk assessment. So again, good practice for any organization to go through, independent on if they go through a SOC assessment or not. The next common criteria that I want to cover is monitoring. So this is organization level monitoring, control monitoring. So the organization has all these controls in place, and they need a system which monitors to make sure those controls are functioning. So this could be both an internal audit program, an external audit program, a combination of both, but ultimately they need a system in place to make sure all these controls that they've implemented are monitoring. And then if something isn't working or if someone isn't fulfilling their responsibilities, that there's a corrective action plan in place, and senior management and or board of directors are involved as appropriate in those corrective action plans and retooling the controls to make sure everything is monitoring correctly. So again, important control, you can have all the best designed controls in the world, but if you're not periodically monitoring those controls to make sure they're effective, that could be a big gap in the program. Next, going to common criteria 5. So think about back to common criteria 3 with the risk assessment. So ultimately, all the risks identified as part of that assessment should have controls or the high risks or medium risks should have controls in place to mitigate those risks down to an acceptable level. Again, no specific requirement as far as what's acceptable. That's an organizational determination, and each risk will be different based on, a set of criteria for each individual organization. So, but the SOC 2 framework does require that there are controls in place to mitigate some of those accepted risks down to a reasonable level. So here's where those controls would be listed at a high level. And this also gets into some of the general IT controls, which we'll then pivot over into with CC6. So this is kind of a catch-all for both those risk assessments, general IT controls. Okay, moving on to CC6. So this is where we get into the nuts and bolts of the IT controls, physical access, logical access controls. So one thing to note here, it is important that the scope of the SOC 2 report be appropriate, because if the scope misses the mark and it's cast too wide of a net, anything within the scope of the SOC 2 report, whether that's relevant to the security commitments, system requirements of the system, they're going to have to be included within the SOC 2 report. So that could be multiple physical locations that aren't really relevant to service commitments that are being brought inside the scope of the report. So the SOC 2 framework does specify that logical access to infrastructure, software, and other systems within the scope of the report. There must be controls designed to help restrict access and then also administer access. So any of those administrative level accounts are properly secured, limited to authorized individuals. You can also think about onboarding, terminations, transfers. Controls are required to be in place to kind of address all those security concerns as well. And as I mentioned before, this not only applies to logical access, but think physical access too. So if you have multiple locations that house sensitive data for the organization, you want to make sure physical controls are in place to help restrict access to authorized individuals there. One thing to note on the physical access, another thing that's important is, a lot of these, especially if it's like a SaaS type organization. A lot of that physical access could be offloaded to what we'll talk about a little bit later called a subservice organization. So they outsource to a cloud-based provider to kind of help manage that infrastructure. So if that's the case, the physical access controls could then be scaled back at the organizational level. Again, no specific requirement as far as what's needed for logical access or physical access. That's up on organization by organization basis. And again, it kind of depends on the type of information, the type of data, and then the industry that the organization's operating in as far as what needs to be implemented. Next, we're going to go to system monitoring. So back in CC4, there was organization monitoring. This is more, think about security events, incidents, vulnerabilities. So monitoring the infrastructure, the computer network that's in place to help ensure any incidents that are identified, or then there's a plan to remediate, treat those, use the lesson learned to kind of help prevent those in those such failures in future events. So you can kind of think, security incidents are becoming more and more commonplace. So really making sure you have a strong incident response program in place is important. And that's where this will be displayed in the SOC 2 report. Again, nothing new to add, as far as CC 7.4 and 5, again, kind of just covering on those security incidents, business continuity, and developing and implementing activities to help recover from any identified security incidents is important. Moving on to CC 8. So this is change management. This is important for all organizations as well. This not only covers software development, but think infrastructure development, infrastructure changes for anything in scope within the SOC 2 report. So again, if you do develop your own software, this will definitely be crucial as far as making sure a solid plan's in place, controls are aligned here to kind of help, prevent any changes that would be unauthorized from making it into the production environment. And then also making sure that any changes to infrastructure too are properly approved in accordance with the policies and plans in place for the change management. So again, very important, only one sub-criteria here, but that's not to underemphasize how important the change management process can be to the organization. And then with that, CC9, the common criteria, this is risk mitigation. So CC 9.1, this is, think of general risk mitigation, cyber insurance policies are a good one that are aligned here. I think that's probably the most common that I see. Also, business continuity plans are important here for risk mitigation as well. So that making sure a formal plan's in place, the plan's reviewed on a periodic basis, certain aspects are tested as well, I think are important. And then the next one kind of aligns with what Bill's been talking about. So assessing vendors with as far as risks associated with partnering with them. So making sure there's a formal plan in place, depending on the vendor. Not all vendors are created equal. Certain ones have access to certain data and makes them a higher risk. So there might be different assessment policies in place related to that, where you might need to get an independent report, a SOC 2 report for that vendor. Whereas if it's a vendor that doesn't have access to any sensitive information, it might just be, a high level interview, just a quick review, a check of a W-9 type that. So again, making sure a plan's in place, a policy's in place, and then periodic assessments happening, both onboarding and once they're onboarded, if you continue that relationship, assessing them on a periodic basis as well. So that covers the 9 common criteria. I kind of went through it pretty quick. Obviously, a lot more nuance there as you're going through the SOC 2 journey, especially if you've never gone through it before. I will say the AICPA has a great resource. They go through each of those in a lot of detail. They have what are called points of focus that align to each of those common criteria as well. So that way it kind of helps the organizations align, okay, I might have controls related to this point of focus. So it's really a great resource. Again, kind of overwhelming to look at from a high level. Definitely involve, your service auditor or consultant when you're kind of helping assess what controls need to be included in the report, the scope of the SOC report. So moving on, I wanted to now touch on some components of the SOC report. So not a hard and fast rule what these have to look like. I will say the AICPA has come out with a SOC 2 guide that kind of has a general recommended format. And most of these will follow this format. So, you'll have the same 5 sections. They'll all follow the same order, minor formatting things here and there. So the first is important. It's the independent service auditor's report, independent attestation. So the service auditor will issue their opinion here. It could either be unmodified, clean, modified, or disclaimed, depending on the issues that uncovered during the audit. One thing to note too, you can't just go to section 1, look at the opinion, see it's unmodified and stop there. You really have to understand what controls are being included within the report. So that requires reading the entire report and making sure what's covered in the report aligns with what you're using that service organization for, and making sure there are no gaps as far as, hey, we're really concerned about this control, but it's not even included in the scope of the report. So that's important. Obviously important to look at this section 1, but you can't really just stop there. Section 2, this is management's assertion. So this is all the facts and assertions that the service organization is going to present to the reader. There's a standard format of this issued by the AICPA. So these all should look pretty similar, should be in all SOC 2 reports. And if there isn't one, that would definitely be a big question mark. But in most SOC 2 reports, you're going to see this management assertion, and it should look pretty similar from report to report. Section 3, so this gets into the meat of the service organization's description of all their controls, the system they have in place, the organization, the background. So this is typically more of a narrative structure. This includes boundaries, infrastructure, controls, subservice organizations, which we'll talk about a little bit more, user entity controls, and some other relevant information to the system. This could be one thing to note as far as any controls listed in Section 3 typically are carried to Section 4 and will be tested by the service auditor in that section. So with that, we're going to go ahead and jump right into Section 4. Or actually, right before that, I wanted to clarify one thing. So in SOC 2 reporting and SOC reporting in general, you'll see vendors and subservice organizations referenced. So one thing to note, all subservice organizations are vendors, but not all vendors are subservice organizations. So this is really based on what functions the vendor is providing. So if it's critical for the organization to achieve their security commitment system requirements, then we could deem that vendor as a subservice organization. And once they're deemed a subservice organization, they're called out specifically in the report. And there's a couple of different ways that they can be treated. So we'll flip over to the next slide here, and we'll kind of cover this in more detail. So you have both the inclusive method and the carve-out method. So depending on the nature of this subservice organization, we could say, hey, this is important, but we're going to go ahead and carve it out of this report. We're going to recognize that they do use that subservice organization, but their controls are excluded from this report. So you want to make sure that you obtain a SOC 2 report for that subservice organization if you require additional information on that subservice organization. Where the flip side is that vendor or subservice organization could be so intertwined with the service organization that we're required to bring them in the scope of the report. So if that's the case, you'll see a reference to them in the service auditor's report, the assertion letter. They'll have their own assertion letter. The specific controls relevant will be listed in Section 3, and then they'll also be tested in Section 4. So again, they're kind of intertwined within the report. So typically you'll see the carve-out method, but sometimes you'll see the inclusive method. So just be aware of that when you're reading the SOC 2 report. Next section I wanted to cover is Section 4. So this is where the testing occurs. So you have the identified controls, the tested controls, the results of those tests, and then any exceptions would be noted. So this is typically done in a grid-like format. So I'll flip over to the next slide. Again, no prescribed format here. Seen it done a couple different ways, but overall, it's going to look pretty similar to this, I would say. So you're going to have like a control number assigned, and then you're going to have the actual control. So again, this management control should be referenced or linked back to Section 3 in the company's narrative, should be included there at some point. Again, could be, depending on the nature of the control, it depends on what section's included in there. Then you'll have the test. So this is the service auditor's test. This is what they did to validate the control. So if you have a type, so one thing also to note in a Type 1 report, it'll just list the control and the management control. It won't have a test or result section. So if you have a test and result section, that's going to be a type 2 report that's covering a period of time and testing the operated effectiveness of the control. One thing to note in the results section, you'll either have no exceptions noted or an exception noted. If there is an exception, there's an opportunity for management to explain what happened with the exception. This can either be included in section 4 or section 5 of the report. So it's important to really obtain an understanding of what that exception was, and then assess how that impacts your organization as a user of this service organization. So it is important to note, sometimes they could be relatively minor. Sometimes they could be so significant that they'll then carry over to the service auditor report and require a modification of that opinion. So very important to really understand the nature of any exceptions identified in the report. And finally, after section 4, I wanted to cover on, there'll be in section 3, this will be listed sometimes section 4. There's what are called user entity responsibilities and complementary user entity controls. Typically in the past, reports have been light on these user entity responsibilities. They've been more focused on the complementary user entity controls. Recently, the AICPA has come out with more guidance on this. And so we'll probably see a shift from the CUECs over to these user entity responsibilities. So just keep an eye out for that as you're reviewing the SOC reports. But the important thing to note is these are either controls or responsibilities that you as a user of the service organization should have in place in order for the system to be used or for the service commitments to be satisfied by the service organization. So very important that this is read, making sure these are implemented at your organization. And then I've already kind of covered this, so I'll just touch on it briefly again. But yeah, the complementary user entity controls. Again, these are controls that are required to be in place at the user entity in order for the service organization to achieve security commitments. The last area is subservice organization controls. So again, I talked about vendor subservice organizations. Here, if the subservice is carved out, there'll be a section related to subservice organization controls that are listed here. And these will essentially be the controls in place that management assumes that the subservice organization has in place and will be implemented to achieve the control objective. So again, important to review this and obtain an understanding as you're going through SOC 2 reports. And really just to kind of tie it up, so you have the service organization here in the middle. Subservice organization will be a subservice of the service organization, and then the user entity is the user of the service organization. So it gets a little confusing. I thought this chart would kind of help align that and kind of help show the flow of the information here in another manner. And with that, we have another polling question. And I'll go ahead and advance the slide. And I think with that, I'm going to go ahead and kick it back over to Bill, and he's going to touch on using the reports to assess third-party risks. And then I'll come back and go through the next step of achieving SOC 2 after that. Great. Take it away, Bill.
Thanks a lot. That was a lot of very good information there that you went through. So I appreciate that. So the next agenda item I want to cover, and I'll go real briefly here because is about using the SOC 2 for the third-party risk. So I want to go over a real high-level approach to a third-party risk management process that you can put into place. And I also wanted to call out that if you want a detailed dive into third-party risk programs, we did a webinar back in the spring, I believe it was March. So you could go to the hbkcpa.com website, and then in the search term on the website, you could enter in the literal third-party space risk. And that should bring up that webinar for you, and you can download and watch the webinar there. And I'm not sure if we have the ability to get the slides right from the website, but if not, my contact information will be up on the screen near the end of the presentation, and you can email me and I can get you a copy if it's not accessible on the website. But I know the recording is there, so take a look at that if you're interested. So using the report for third-party risk management, 3 high-level steps that you identify who your third parties are, get SOC reports from them, and then review the section. And like what Owen talked about earlier, verify the scope of the services is what you're looking for, the time period, and if it's a type 1 or type 2 report, being type 1 just saying that the controls exist, type 2 being a little more thorough, being that the independent party gives you an assessment of how effective those controls actually work. So those are some things to keep in mind. The last steps, going into a lot of the stuff that Joel talked about, was section 4 on the tests. You can actually look at if the areas that you're really concerned about, if there's a control that would cover that area. Like maybe you're really concerned about who has access, and then you could look to see what the user access controls are specifically in section 4. And then if anything is carved out as far as user entity controls, that where they're thinking that you have to have things in place to make sure that the system is properly secured. So those are some things to keep in mind as well. And then lastly, before I turn it back over to Joe, I wanted to cover some misconceptions. Just because an entity has a SOC report doesn't mean you're all good to go, because like I just talked about on the previous slide, you have to make sure that the scope of that SOC report is covering things that you're concerned about. And a lot of times, when I do my vendor risk, I'll ask a vendor for a SOC report, and they'll send me a SOC report from like 2 years ago. And it's not the same thing, because as quickly as things move in the IT world, you can't just assume that their controls that they had 2 years ago are the controls that they need now. So, basically take a look at that, and don't fall for the trick that they only need a SOC 1. SOC 1s are typically less expensive than a SOC 2, but again, it doesn't give you any type of assessment as to how effective that control is or working. So those are some things that you would should take in effect especially when you're requesting a SOC 2 report. Just look at it from the perspective of a SOC 1 being more controlling over the financial reporting. And think of it as like you're applying for a loan, a business loan. The bank's going to want your income statements and everything, and they're going to want to know that they're signed off by a third party. So your SOC 2 reporting on your vendor risk management, should take the same level of scrutiny. Just, make sure it's the right scope, it's a current report, et cetera, et cetera. So keep all those things in mind as you're looking at this as a part of your risk management. And again, if you want more detail, because I know I went over a pretty high level, but check out that webinar from March and give you more details, or if it doesn't cover what you're looking for, just reach out to me. But with that, I'm going to turn it back over to Joel to do our last topic.
Perfect. Thanks, Bill. So I want to wrap up with, so once you've decided to go down the journey of SOC 2 or looking to explore it, what are the steps as far as getting through that process? So what we'll do typically with a client, so they reach out, they're curious about it, and they're like, okay, we want to do this, but we don't know if our organization's ready for it. We're not sure what controls we have in place. So there's a consulting engagement, which is called a SOC readiness assessment. So what the purpose of this engagement is that it's an internal use consulting engagement only. It's not going to go to any third parties. So what this will do is this will identify service commitments, system requirements, system boundaries. We'll also assist with selecting what trust service criteria should be used. So we'll include security, but there might be appropriate to include availability, confidentiality, et cetera, depending on the, once we review, service contracts and other agreements with customers, we're like, hey, that might be important to include this. We think your customers are really going to want to know about this. Then what we'll do is conduct general interviews, walkthroughs, review policies, and we'll develop a control library here. And we'll develop a complete list. And then what we'll do is we'll map those then to the trust service criteria to kind of help establish which ones you have in place. And then if there are any gaps, weaknesses that require remediation, we'll include that in the consulting deliverable. And then we'll kick it back to the organization, and they will be responsible for taking those gaps and weaknesses identified and then remediating them, implementing controls to help close those gaps. And then once that's all done, then we can move on to the SOC 2 Type 1. So what that is as Bill talked about before, point-in-time report. Typically, say, done December 31st, you'd issue the Type 1 report, and then you'd move on to what's a Type 2 report. So that covers a period of time. So January 1 through December 31 of the next year would be the Type 2 period. So you'd let that period close, and then you'd issue the report in the Q1 of the following period. So again, as you can see, it's not an overnight process. It takes a little while to get from that readiness assessment, issuing a Type 2 report. It's not an overnight process, but it's a journey. So a lot of times organizations will go ahead and get the Type 1 report. That way it allows them to get something into the hands of their customers, their prospects, to say, hey, we're going through the SOC 2 process. Here's our Type 1. Here's the controls we have designed and implemented. Here's how they map to the common criteria. And that way that gives their vendors some comfort there. And then they can also say the current year's our Type 2 reporting period. We expect that report to be available in Q1 of next year. So I've already kind of covered the main difference that I'll talk about again is that there's actual testing occurring of the controls, making sure they're operating effectively throughout the period. So that includes sampling, observation, inspection. So a little more thorough and a little more time intensive from both organization perspective and the service auditor's perspective as well. And with that, there's the next CPE question. And so that kind of covers the high level as far as the SOC 2 journey. Again, covered at really high level. It's not an overnight process, could take a while. So it's important to, if you have prospects or current customers asking for this, it's not something you'll be able to get overnight. It's definitely something to reach out to your service auditor and make sure that the CPA firm that you're engaging has experience doing the SOC 2. It's one of those that, it's a little different from your typical financial audit reporting. So you want to make sure that they have the IT experts necessary to help facilitate the SOC 2 engagement. With that, I wanted to touch on some current trends and news developing. So one thing we've noticed here, we're based in, have locations here in Ohio, and the state of Ohio has issued some new data security and privacy terms. These are for new suppliers and those seeking contract renewals. So if they offer specific services, house state data, there's going to be some new requirements coming down that might require an annual independent assessment or a SOC 1 or SOC 2, depending on the nature of the data, what services they're providing, what makes the most sense. I assume if it's more financial reporting, they'll probably lean to having a SOC 1 engagement requirement. Or if it's more security, data privacy, those type of terms, it'll be more in the SOC 2. So again, no specifics on what trust service criteria are required to be included. Probably depends on the nature of the contract. But just note that this is something that's becoming more and more prevalent. As Bill mentioned, I think more states are issuing laws and regulations or guidance related to security of data. So this is just one of the latest in many where you'll see these requirements come up in order to obtain contracts. With that includes, I'll go ahead and kick it over to Bill to kind of do the wrap up.
All right, great. Thanks, Joel and Evan. As you guys can tell, that's a lot of information that they gave us. So they're obviously very well versed in the topic. So if you have any questions after the fact, included all of our phone numbers for our offices and our email addresses. So feel free to reach out to any of us. And I hope you found today's presentation worthwhile. And as always, like you said, we're here to answer some questions. So with that, I'll reach out to Michelle and ask her if anybody has queued up any questions in the QA for us to take a look at.
Yes, we did get two questions that came in. The first one is, how do I go about having HBK assist me with a SOC readiness assessment?
Yeah, absolutely. I'll go ahead and take that one. I've done quite a few of these SOC 2 readiness assessments. So I think, the first thing what we'll do at a high level is just have an intro meeting to kind of get a better understanding of, who's asking for a SOC 2 report, why the interest in the SOC 2 report. making sure that the appropriate SOC report is being explored. So if we discover during that call it's really more focused on financial reporting, we might direct you in the discussion of a SOC 1. If it's more data security, we'll say SOC 2. And then what we'll do from there is then just have a high-level questionnaire that we've developed that kind of helps guide the organization through, okay, I'm going to identify in a yes-no format what controls are in place. It'll help map those to the appropriate control objectives or common criteria. And then we'll also assist in selecting those trust service criteria if it is a SOC 2. And then, on from there, then we would enter into, after the consulting engagement's completed and there's a deliverable there, management reviews that, then we can enter into an examination agreement for a SOC 2 report or a SOC 1 report after that fact.
All right, great, thanks, Joel. Michelle, you said you had one other one on there?
Yes, the other one is, can HBK assist me with establishing a third-party risk management program?
I'll take that one, Joel. The answer to that one would be a yes. So if you do have that need, we can help you to put in place your policy, which is going to be the first thing you're going to need, and then also help you backfill with the procedures, processes, and we've done this a number of times. I've done it personally in-house, and we can put all the things in place to help you to evaluate what vendors are the most risky that you need to be looking at. So if you are interested in that, just please reach out to myself. I know there's also some things out there where if you're doing, public, if your business is to, provide third-party services as far as like financial reporting or benefits audits, types of things like that, then there's a requirement by the Department of Labor to have a third-party risk management process in place. So we've actually helped a number of firms put those in place too. So if this is in your area where you really desire to get something put in place, just reach out to myself or Joel or Owen. We can help you out with that. But like I said, we've got a lot of experience doing this, and we can definitely help you out with helping you put up a third-party risk program. Additionally, again, I'll tout that March webinar where you can go out and review the recording of that webinar, and let us know. Thanks. Any other questions, Michelle?
That was all.
Okay. All right. Well, looks like we're almost out of time, approaching the top of the hour. Again, I hope that everyone enjoyed the webinar and got a lot of information out of it. And like I said earlier, we'll send out before the end of the week a link to the recording so you can watch it again or share it with colleagues, as well as the slide deck. So again, hopefully it was very worthwhile for you. I'm very appreciative of Joe and Owen for helping out with this, because they provided a wealth of information for us today, and it was very beneficial. And I'd like to put out a placeholder for our Wednesday, September 25th, for our next webinar, which is going to be talking a little bit about the exploring one of the subsets of identity theft and what you can do to help protect yourself there as far as credit freezes. So that should be pretty interesting as well. So put a placeholder out for that on the 25th. And thanks again for everybody joining. Thanks again to Joel and to Owen, and everybody have a great day. And thanks for attending.